Good afternoon. Thank you very much for coming. It's a bit of a graveyard shift, just ready before dinner and finishing off the good meetings we had over the day. I'm sure everyone was really busy. The title today is Does Size Matter? There's a lot of activity at the moment in the budget hotel sector in Germany and across Europe. Things are consolidating. Private equity players are moving into the sector previously not exposed to the hotel sector, and we feel it would be a good topic to discuss what are actually the growth strategies in the budget hotel sector. And my colleagues were so kind to do a bit of an animation here. And I was already complaining that the bubbles are not kind of like popping up. So I hope you can see it. So what are the characteristics in the budget hotel sector is from basic to premium, market consolidation, GOP levels above 50%. And these are points which we would like to discuss today with the panel. We have, and I really hope we get there, I would like to really welcome the panel discussions today. We have got Max Luscher from B&B Hotels, just freshly joined. Let me just look up your title. You're Head of Asset Management and Development. Is that correct?
Yep.
Then Stefan Lenze, who is Head of Development for Motel One. And we have got David Edman, who is owner and CEO of the Novum Hotel Group. And last but not least, Martin Schaller, Head of Asset Management for Union Investment. So we have a bit of kind of like a mixture of really exciting participants. We've got the investor side, we've got the operator side, and we've got international players, more local players. Maybe Max wants to comment a little on the B&B deal. I'm sure that's everybody would like to hear a little about. So before we start, I would like to, we were discussing before, and I think it would be good to have a couple of theses what we would like to prove and discuss today. And as we're a really small group, we can make it a little therapy session together. We can bring everybody a little in front. Everybody can ask questions if they want to. So I would like to have this very interactive. And so what's the landscape and where are we coming from? I was quite surprised when I saw this graph first. It's basically on the left-hand side, we've got the ADR, and on the right-hand side, we've got the occupancy figures. And you can't see that. That's really good. We can do test questions afterwards. We've got basically the yellow or orange bar is the budget hotel sector, and the grayish one is the general hotel market. And I thought it would be a little more different over the time being. I was always thinking, well, budget hotels are running 90% occupancy, low ADRs, and if you compare that with the wider market, the gap is not too far. And I think that's pretty exciting. If you look over the corresponding time, we've got in RevPAR increase from 210 to 215 of around 17%. And the compound annual growth is around 4%. If you compare it with the budget segment, RevPAR actually increased by 19%, and the CAGR is 4.5%. So it's not so far off, and I think this is really surprising, because it's one would think that actually the general figures would be higher for the general hotel sector. And I think that's probably one of the challenges why the budget hotels are quite successful in comparison to the more standardized 4- or 5-star products. So what are the 5 C's we are going to discuss today? Budget hotels have benefited from sector demand over proportionally and will do so. Second one is budget hotels are more profitable than 5-star hotels. Not sure. Depends. Budget hotel operators require a 15% NOI margin or more. Short product life cycles eat up low initial investment costs, meaning you probably need to change your rooms and things every maybe 5, 8 years, 10 years, depending on your product. And that maybe eats up the low investment cost initially. And only budget hotel operators with more than 50 hotels will remain competitive in the future. Really interesting to hear your thoughts on that. So why don't we start off with our first question? I would really like to hear from you. Did you have a good year? How was 15? Happy? Not happy? Could it be better? Max, maybe you want to start off?
Sure, happy to start off. I mean, obviously, having joined the company in beginning of January, I have very little knowledge of B&B. So I have my notes here ready from the team colleagues, and I hope I won't make too many faults about B&B. Well, yes, it was a great year, 2015, 81 hotels under operations as of now. Development pipeline, 12 under construction, 20 further approximately in the development pipeline. Revenues have been up by approximately 20% year on year. We have broken the 100 million euro revenue line in Germany. Actually, our profits are growing a lot faster than our revenues are, which means it's quite healthy. And we are increasing not only ADR, but also occupancy rates. So overall, RevPAR is heavily increasing and above market levels. So,
can you comment already on the transaction, or?
Transaction means we've been taken over by PEI, largest private equity fund in France. Closing is about to happen these days.
Okay.
Last things being done, such as clearance by labor union and whatsoever, but the deal is there, and looking very much to get PEI on board. Looking forward to a lot of support to keep growing even faster in the future.
Stefan, how was Motel One doing?
Yeah, it was an excellent year. We have 51 hotels in operation at the end of last year, 14,000 rooms, 4,000 outside Germany now, more and more we see that. We strengthened our position in Germany with further hotels in Munich and Berlin, and internationally we opened hotels in London, Amsterdam, Prague, Vienna. So it's been good. So we had 9 openings, and despite that, we retained occupancy at 75%, and RevPAR is up. So yeah, all good.
Okay. You're more happy with the expansion abroad, or more? What makes you more happy? Where would you like to? If you look back, what would you have liked to do different in 15 maybe? Is it something where you would say overall right strategy, or what really makes you, what are great milestones where you would say that things are maybe you need to achieve more, or?
I mean, obviously things like London, Amsterdam make us really happy because, they're difficult cities to get into.
Okay.
But yeah, so we managed that, and we're super happy with that. But we're also happy that, we recently opened in smaller cities in the UK, like Manchester, for example, and that's doing really well, which, I think perhaps is the bigger surprise. But yeah, so it's good.
Okay. David, growing,
yes. Last year was also for us a very successful year. We targeted that we want to expand during the 3 incoming years up to 65, but we did it in 1 year. So end of 2015, we had 61 hotels under operation, and we generate as well 100 million euros revenue. And we have a full deal pipeline during the next incoming years. Since last Friday, we took over also the international European markets like Vienna and Budapest, and we have a full deal pipeline right now. So our acquisition team is very motivated, but at the end, we need closings, and we are pushing our team. We do it with passion. And the next steps will be also Amsterdam. London, we are just trying to get in because it's very difficult, but we try to put our focus on owned operator hotel opportunities, which are going to sell. and this year we are expecting more than 20 additional hotels.
Okay, huge pipeline.
Yeah.
When you look back on 15, like what I asked Stefan as well, would you or Max, what would you have done differently? What are you really? Would you like to go abroad earlier, or is this kind of like the right moment now to? Are you going abroad just because you can't get enough assets in Germany, or?
No, I think the strategy and our vision was that we want to expand European-wide, and our target is that we positioned our hotels in central locations. Mm-hmm. We have definitely hotel assets in Germany as well, but here we are now focusing more on developments, mm-hmm. because there are no such more opportunities as it is. And the European strategy is because we are now in 17 destinations in Germany, so the big 7 is already done, and the secondary destinations as well. Of course, if we have the opportunities in the big 7 to grow more, we will do. But in the secondary destinations, our focus is not more than 3 hotels to operate.
Okay.
Yeah.
You're all working with Union, no? Or you're kind of like, they're a little picky, no? They're not taking everyone.
Sometimes it takes a little while.
Martin, from an asset management point of view, I think you obviously are kind of like focusing on the holding pattern, and you're kind of driving yield kind of like an ongoing basis, and you kind of like monitor that. So I think it's really nice that you're kind of like on this panel, because you can challenge all of the statements the operators are making. Happy what you have on your portfolio, or?
Definitely, and also happy to confirm that also Union Investment has a record-breaking year in 2015. Our investment team, headed by Andreas Löcher, managed to buy 5 hotels in Europe, and also managed, after some preparation time, to buy our first hotel in Northern America, in Boston, with the Godfrey Hotel. We are very happy having entered this market now, a very extremely competitive market, also from our perspective at least. And from the asset management side, we were also quite active. We renewed the lease contract of the Pullman Hotel, which is opposite to the Intercontinental here in Berlin. And we also decided to enter into a development of a new Motel One hotel in Munich Riem, next to our shopping center, as an extension of the already existing shopping center. So yes, it was quite active, and there are a lot of challenges to come, I guess, in the future for our asset management team, but we are well prepared and we are happy to deal with it.
What are these challenges?
Yes, you know, there are still some remaining contracts signed in the 90s, which now will expire during the next few years, and that will be our main challenge to deal with, to renew this contract, to reposition the properties.
All right. So from an investor / asset management point of view, when you look at the budget hotel sector, and I think this is traditionally Union was kind of like 4-star plus, no?
Yes.
And since when have you kind of
2009?
like decided? Sorry?
2009.
2009.
Yes.
I thought it was like maybe 15 or something. Time flies. So why and why have you decided budget is nice or budget is sexy for you? What kind of like, what reasoning was there for you? How do you view the budget hotel sector?
You know, honestly spoken, it was quite a long discussion we had with our board members and also with our fund management whether to enter into this segment of budget hotels or not. But what we have seen also already in 2009 was that until then the budget segment has experienced a very sustainable and also very profitable growth so far, and we have monitored the market and we have seen that certain brands and certain operators in the market did manage to grow much faster than other players in the market. And we ask ourselves, okay, what is the reason for such a development, and what is the reason that some brands or some operators are growing much faster than the others? And what we were able to see is that it's more about the attractiveness of the individual hotel concepts, and this is what also finally convinced us to deal with this segment, because what we've seen is that there are players on the market, chains, brands in the market like Motel One, like Holiday Inn Express, for example, which finally managed to combine this kind of luxury atmosphere with a reasonable priced lodging product. And that made it finally of interest for us to invest in.
What's your feeling from an investor point of view or asset management point of view? Is it important, does size matter for you? When you go through a scoring model, would you go for a hotel chain or a lease contract, or you buy a hotel with a lease contract with a budget hotel chain which has maybe just 50 hotels?
You know, of course, track record and size is always interesting to see, and perhaps it helps to build up confidence when deciding whether to invest or whether to partner with a new hotel operator or not. But at the end of the day, it's about convincing if the operator will manage to occupy a niche in the market, if he will manage to deliver a product where is definitely demand in the market. And this is for us as same important as questions like covenant or track record or size of portfolio.
Maybe we come back to that a little later. I'm really interested to hear what are your strategies when everyone is moving now into Germany, where there's, as I mentioned, there's quite a huge appetite from investors to buy operating platforms. I'm really sure you're getting calls you've just been sold, but the other ones are probably getting every month a call from someone who would like to buy the platform. What are your growth strategies going forward? Stefan, what are you focusing on? And
so at the moment we've got 8,000 rooms in the secure pipeline. So by 2018 we'll have 22,000 rooms in operation, and the pipeline is about 50% Germany, 50% outside Germany. So for example, next year we'll open in Zurich, Barcelona, Paris, which we're looking forward to. So yeah, so it's really Germany and internationally both ways. And yeah.
So you would say 50-50 the balance, or?
Yeah, and going forward the pipeline is about 50-50.
Is that because you feel Germany is saturated, or do you think it's better opportunities in major gateway cities?
No, I don't think it's saturated. For Berlin, for example, where we're adding 1,500 rooms over the next year and a half, and we still just keep market share because a lot more overnights are created in Berlin. Now these are just additional markets. I mean, London's got 50 million overnights. This is a market where you want to be. It's the biggest European market, and Amsterdam and other. They're just new attractive markets with lots of overnights, high occupancy, high ADR. So yeah, that's where you want to be.
Is there for you a rule of thumb where you would say, you mentioned overnight stays, where you would say, you've got lots of markets in Germany where you've got not only one hotel, but you've got a couple of more hotels, where you would say, oh, if I provide, let's say, 20% of the total room stock in Munich, I might say this is a little too much. Or is this?
Yes, absolutely. So in smaller cities, we'd say probably 1 million overnights is what we would expect.
Okay.
But we have signed leases in smaller cities. We signed in Aachen, for example, which got 700,000.
Sure.
But if it's a really good site and an excellent spot in a smaller city, why not? Makes sense.
Okay.
But otherwise, I don't think there's a city in Germany even that's saturated, because as long as demand is up, we can do more. And maybe that's one thing we need to look at, because we always look at the supply side. The demand side is important as well.
I'm really happy you say that, because when we do kind of like market analysis, I sometimes it's always kind of like we create demand once we're there. You know, it's always finding the balance between really understanding the market fundamentals. I see you nodding. It's probably one of the key things to really understand. Is it a saturated market, or do I induce demand, or is it because of the brand? And I think it really helps when you've got an international brand which has track even outside Germany. That certainly helps. David, what do you think? You moved just abroad. What's your strategy over the next 3 years?
Strategy of the next 3 years is growing, and the expansion strategy abroad. Germany was already during the last 24 months in our strategy paper, and we have as well a deal pipeline of 6,000 rooms already now, and it's a mixture of Germany and out of Germany. So I would also say it's about 50-50% if we split it. And you know, we have the platform in our headquarters. So for us, is the synergy effects. The reason why we want to grow, because we have the sales marketing department, we have our reservation department, yield revenue management. So mainly our fundament is so, I don't want to say overstaffed, it is healthy staffed, so that and organized, so that we can dock in the products and run the business very healthy and sustainable. And we announced that we want to expand by 2020 with about 85 hotels, but we have a good motivated acquisition team that we could sign these deal pipelines. And it takes a bit time, but it's realistic to close the deals.
When you look at and strategies, it's probably quite exciting. Motel One has large hotels now. You shifted a little from the 150 hotel rooms. You've got now really sizable products in the market. B&B, what's your average size of hotel?
Between 80 and 120 is our prototype hotel.
Novum?
95.
95.
Yeah.
When you look at your strategy for B&B, would you follow the same direction? Do you see there's a need for larger products in the market when you look forward?
Well, I think the key thing is wherever we take a look at in Germany, we see very likewise to Motel One that markets are not saturated yet, and there's potential and opportunity everywhere we take a look at. Interestingly, we have a complete different strategy in meanings of our operating concept. Obviously, trying to stick around 80 to 120 rooms per hotel. We are focusing on only local business, which means whatever location we take a look at, it doesn't really matter for us. Is it core city center? Where is the location? We take a look at the location and situation of the property and ask us the question, is the prototype of 80 to 120 room hotel B&B being filled by local demand for hotel rooms? And this means local demand without any corporate agreements, without any yield management, no revenue management, no OTAs in place at very best. So we have a complete different model.
Okay, how much is booked and how much is booked through your platform B&B directly, and how much is generated? Kind of like, are you happy with that split roughly? I mean, is it everyone wants to bring the customers back on their platform and not lose to the ODAs, but is it when you mention that you're basically having a lot of directly booked channels? I think that's really great, and it's a probably more reliable and stable supply side.
No, absolutely. I mean, in the end of the day, OTA usage is very low. I mean, it's double digit, yes, but not far away from kind of the borderline of being double digit. Obviously trying to reduce this even further as we simply don't need it in many products of our group. And on the other hand side, the rest is direct business. I mean, we don't do any framework agreements, and Actually, very often companies being located next to our hotels initially go like, oh, we don't like that, please stay in another hotel somewhere. But by the time they realize what our product is about and that we are a lot cheaper, offering very, very good value for money, they keep coming back.
Would you like to have larger hotels when you go forward from a, like Model 1, or are you happy with the spot you're kind of like the size you're having?
I mean, what means large here?
200, 250, 300?
We will obviously take a look into, let's say, a 200-bedroom hotel in an A city in the right location as a flagship B&B, but that's, I mean, not sometimes a third of a Motel 1, so is this really large? I don't know.
If you would need to pinpoint the most 3 crucial success factors for your operations, David, what do you say? What makes you successful?
Yeah, for us, I already mentioned the headquarters is already done, so that is for us the fundament of growth. But
would you say?
Terms, yeah?
Sorry for interrupting you, but would you say it would be interesting to see? Does it matter for you from a headquarter point of view if you've got 80 hotels, 100 hotels, 150 hotels, or is it kind of like it's pretty much scalable? It's scalable.
Okay. It's definitely scalable. We have also an IT company under our holding, and we are very effective and thinking with our IT company always what kind of process optimization we can do. We work with a very simple own database, for example. So through IT innovation, you can scale a lot, and you can also have synergy effects through this investment. So we have 15 IT employees in that daughter company, and as well we try to generate direct bookings as well. But also like alternative payment methods, generating
IT,
PayPal.
IT is one?
IT is one. We are flexible.
Okay.
And we have short ways.
Okay. Stefan?
I think the single most important thing is you need to have a clear idea, of your product, who you are, who you want to be, and really, go with it. We are, and that for us is budget design. We do budget design, this is all we do in our product, geared towards that. And so, to the extent there, it needs to be a perfect location for us. The quality needs to be outstanding. We are every day working extremely hard to get customer satisfaction scores are where we like to see them, and they are very high. That makes us extremely happy that they are higher than competitors. It's really good to see, and
So it's design, customer loyalty,
and I would say flexibility as well. We are flexible in the acquisition.
We've got flexibility
well, I guess flexible in the acquisition process, but I would say also flexible in terms of what your partners want. Understand what the investors would like to see, what their needs are, and then see if we can make that work. And more often than not,
What's your? I mean, Motel 1 was obviously one of the first ones who kind of like introduced the product in Germany. They're kind of like for a long time dominating the market in that sector. How do you? I mean, competition is nice, but there are lots of copycats around now who like to see what Motel 1 is doing, and who's kind of who are kind of like. Trying to follow that path. How do you bring distance between you and the other ones?
Well, I guess we need to look at. Obviously, there's a lot happening in the budget sector. We've got new market entries. If you look at a lot of this is around what I would call sort of entertainment. You see pool tables and DJs and muscle shirts. That's not what we're going do. When we have a clear idea of what we want to do, we want to give people the best quality product at an affordable price point. So affordable luxury, really. And that's what we do. And every day, as I said, it needs to be an excellent site. We're constantly improving our product. And if you stayed in the Motel 1 recently, you'll see that the bar and lounge concept gets better and better, more refined. Tiergarten, I'm not sure whether some of you might have stayed there, was newly refurbished now after just 5 years. What we like to do, refurbishment every 5 years. And it's a space concept, lobbied lounge, on you sit on designer chairs. More Rosso has supplied all of our furniture for that hotel. So yeah, it's really that the customer needs to feel and touch a bit of luxury, really. Yeah.
And you probably don't need to answer, but give us a bit of a feeling for well, the 3 years you're sitting here. Obviously, it would be nice to understand roughly the ADR levels. I would, out of my gut feeling, would be that Motel 1 has probably quite high ADRs between you three. Would be nice to understand. I mean, just in comparison, were you roughly 65, 75 in that region?
Well, it's the revenue per room is 88.
Okay. If you compare that to B&B, and I don't want to kind of like, but it's what I want to kind of like get to is how much does a customer value the additional design features, and because in the end of the day, I would love to discuss later on GOP margins, and kind of like if you make whatever 100, or if you make €1 on a room, it kind of like falls down to your bottom line. If you make €1, there's maybe it falls quite nicely through as well, but it's maybe there's a couple of more layers in the in the kind of like P&L. So you're 88.
Sorry, but that's revenue, right? That's in.
I fully understand. Yeah.
Breakfast and. Yeah.
Okay.
Yeah, I mean, some of the figures of Motel 1 till I think 2014, including, are published on the website differently to our website.
So if you don't need to answer, it's
no, but I mean it's actually quite easy. I mean, we're let's say some 10, 15, 20% below, depending on really location where you are. But actually, you can easily have the discussion: are we really competitors? I would say in many cases we're not. I mean, obviously we're all competitors for whoever guest is out there, because you have the freedom of choice to either sleep with us or sleep somewhere outside in a tent, or book a Ritz-Carlton hotel. I mean, in the end of the day, it's about an individual decision-making process with applications like bookings, whatever. It's about the whole brand factor. Yes, that's all true. What is B&B about? B&B is about to offer the very best price point at the market entry level. So I would assume that actually true budget sector is our core focus, is what we do. From my personal point of view, I see many competitors uptrading heavily into the 3-star sector because true budget kind of values are to me different. I'm not saying that they're doing anything wrong. I mean, fantastic, it's great, and even better for us that actually there's even less competition, because I would assume that kind of a bit damaged 4-star, 3-star products, even 5-star products will have a very difficult time with a new Motel 1 entering the market. However, us with our little 100-room hotels sitting there right at the edge of the city center, just sourcing from the local market, running our business model, we basically don't have really anything to do with each other. I mean, we're doing what we can, and I think we see loads of diversification going on, more hostels, more design-oriented, lean luxury.
So you're kind of like happy where you are, looking at growth strategies, kind of like.
We will continue what we do. We are about core budget sector. budget values meanings best price point at the location where our customers need to stay overnight, good access to public transportation, visibility is becoming less and less important due to website, application, bookings, whatever online. You just have to know that there is a hotel, but if it's around the corner, it doesn't really matter. We will stick with our room size. Obviously, we will test different ideas about 200 room flagship stores. We will not change the financial model behind it. I mean, in the end of the day, we are here to create the shareholder value, what PAI just bought. And PAI bought the success story of opening up, at least for Germany, 81 hotels with a outstanding lease coverage, for example, with a very low risk model within leasing hotels, and everybody...
Enlighten us, what's the lease coverage ratio?
Very healthy. I mean, let's take it from here. I mean, when we take a look at new projects, competitors are in regular 2, 3, 4, 5-star hotel markets are saying, okay, whatever, 110, 120, 130% lease cover. We will not do a hotel below 200%.
Okay.
We will simply not, because this is not adding the value we need to add to the portfolio. And obviously, on the existing portfolio, it's a good bit above.
But you know, don't get me wrong. We're not leaving the budget sector, decidedly not. So we just, you know, if you can stay in a Motel 1 for 69 euros, we still want, despite that, our guests to sit on a, you know, B&B Italia sofa, for example. You know, that's the only difference.
No,
it is still budget.
Absolutely. I mean, it's a discussion what actually is a budget hotel. I mean, there are different perceptions, and I think in the end of the day, it's about marketing. And I think Motel 1 is the perfect example of fantastic marketing about putting the image there. We are a budget hotel, but actually being
boutique.
Exactly. Yeah. I mean, well done. Perfect.
Yeah. But this is also our perspective.
I would just a second, because I think we touched a very nice point here with the lease coverage ratios.
All those financial.
It's called International Hotel Investment Forum, so I think that's a nice thing to discuss. Martin, when you look at asset management point of view, what kind of like, I mean, 200, you must be super happy, no?
That's what we normally see in the segment, yes.
I was just thinking that's what you normally see.
200 is pretty poor. We see something between 200 and 300 normally.
Okay. Very exciting.
Yeah. But I want to agree on what you've said and discussed before, also from an investor's point of view. The discussion or the perception of segments, the borderlines between the segments are more and more disappearing. We should talk in the future more about concepts, because what we see is a discussion: is it lifestyle, is it freestyle, is it true budget? And it's not only with B&B or with Motel 1 you have this discussion with. It's the same with, for example, Ruby Hotels, which would describe themselves as lean luxury, I think. So these borderlines are disappearing, and we should really more talk and more focus the added value of these products and the demand we have in the market for this kind of product.
None of the operators are really focusing on restaurants. No, is that all of you are kind of like
That's true.
bed and breakfast?
Bed and breakfast. Yes.
No 3-star dining at a B&B. No.
Okay.
Yeah, but I just want to add. I think Martin is absolutely right that, you know, the boundaries are blurred, and we need to talk about concept, because we, you know, Motel 1 is a lifestyle brand. If you want, you know, I would say to a certain extent we introduced lifestyle elements into the budget sector. Certainly for Germany, that's true, and there's still a huge difference between that and, you know, a different concept where the emphasis on, you know, DJ, muscle shirt, pool table, and that's a wholly different idea.
And I do not believe that you can scale it. I mean, these guys are more than 10 years in the market, and they have an excellent track record. So for that, it's completely different. And I mean, of course, we are talking about different kind of budget concepts, but I do believe that it's important to have a quantity of hotels in the market. And once we would talk 10 years ago about concepts and who would be faster as the other one, the location is at the end the answer of the demand. And if Motel One has chosen the perfect locations in core plus places, they are already there, and it's hard to compete with these guys. And I would say also what Max mentioned. We are also working, in the same segment, but in a completely different kind of concept. So, and I agree with you. And for that, Motel One is for us not a competitor.
But
we do not want, no, as well not,
okay.
Because I agree with him. I would not go in a city in a C location, but he will do it. I can accept it because never change a running system. It works, right?
Okay.
And if we're putting our focus to scale in a city, 3 to 4, 5, 6, 7 hotels, and in core or in a key. Big 7, we can do that because we have synergy effects. But our strategy or our concept is, I would say, similar like Motel One, to be in the, central location. But our sizes are an average like 95, and but we can do with our headquarter the optimization through IT effects to have excellent EBITDA ratios. And I do, I'm a bit scared about new products in the market because, of course, they are announcing one international hotel chain after the other one that we want to introduce that brand. But I don't know if it is an airport hotel or how they want to compete with Motel One of the location. It's impossible because they are already there. So where you find the plots?
Actually, I would like to get back to what Martin said. I think, and I'm thinking back to the C-level panel beginning of IHIF, which I listened to and which was great. I thought, in the end of the day, it's about the brand. I think within the budget segment, or at least kind of economy mid-scale sector, they're the strongest branded chains out there with the most firm product, with the most firm reception in the market. What it is, if you go into Motel One, it's always a Motel One. It is always a Motel One, and it's flawless. If you enter into a B&B hotel, it is always a B&B hotel.
I agree.
It is 100% standard, and we will not do any hotel out there which will not look like a B&B, because you walk into the door, you know where the dresser is, you know where the table is, the chair is the same, the shower is the same. It's the quality standard product which we're delivering. So kind of the brand assurance we are delivering to our customers is actually, I think, to a large extent, something the big players out there always try to achieve. But I mean, this is quite an obvious story. I spoke yesterday to one of the leading developers, one of the biggest American chains, and he said that once internally they made a few photos of their portfolio, different 3, 4, 5-star products, and presented them to the supervisory and management boards. Which of those products are actually ours? Like, what is a whatever product, or could it be the competitor? 100% failure. Because basically taking a look at the product, taking away the brand from the building, walking into the hotel, you actually don't know what it is. It could be anything. But so walking into a Motel One, you know what it is. Walking into a B&B, you know exactly what it is. And therefore, I think we can continue with obviously different strategies, more city center, less city center, maybe to a certain extent. But I think we just deliver the quality the client.
So brand consistency is probably
100%.
One of the.
Yeah, I think if you look into a Motel One room, that's certainly true. If you find yourself in a Motel One lounge, perhaps you wouldn't know exactly where you are. Well, where you are, you would know, because it's always a local theme that picks up the neighborhood story, so you know exactly where you are. But still, you're in a luxury environment, definitely as far as the open spaces are concerned, and they're all different. every single
It's,
I just want to
Yeah, sure.
add one point. It's a combine of brand and of organization. So I agree that the quality standard is the same, and of course, in terms of developments, what you guys are doing, it's possible. The strategy you can continue on it. I do not believe that if we are talking about new products which want to enter in the market, to copy the same story that these guys are doing it, because it takes time. Developments take time. Unorganic growth, you can grab the opportunity. You can optimize the operation standards. We have also our own quality management standards in each department. So, once we want to take over a hotel, it takes only 48 hours to set up the IT environment and to switch on with our booking engine, and
you're ready
done.
to go.
Yeah, and in during 24 till 36 months, we do our capex budgets and investments so that we have the same line. At the end, we are offering our customer the good location for affordable price in terms of dynamic pricing. So we are yielding very professional from 6 in the morning till midnight on 365 days. It's another concept, yeah? And the third point is that we want to have a sustainable product. If it is not the same product always, we try to have one line to give the customer the feeling of feel home and for affordable price.
Okay.
Hi, my name is Lina. I'm from Jordan. We are a hotel owning company. I would like to know, please. You showed a slide where you were a little bit surprised that the
Yes, we can bring it up again.
Hotels is in line more or less with the other, let's say, 4 or 5-star hotels. But I think with the shifting profile of travelers and with millennials growing leaps and bounds in terms of travel, wouldn't you think that the budget segment would have to follow, because most likely they would be staying in budget hotels rather than in luxury 5-star or 4-star hotels? One. And two, I would be very interested to hear about the demand, your outlook or your insight about demand for budget hotels, because it seems that this is the way of the future. I mean, they have not gotten their fair share in terms of development in the past couple of decades, let's say, and now we're seeing a shift or a preference towards budget hotels more than the luxury segment. That's a feeling that I have. So, I mean, it would be interesting just to hear your outlook. How is this business and what is the potential for it globally?
Max, you want to maybe comment, or?
Probably I have
David,
no clue. To be honest, I mean, us as B&B, I mean, we are in Europe active. Just did a deal in Spain, entering Brazil, doing business in Poland and in Italy. We will go moving into Switzerland, and then obviously further countries to come. To be honest, I think globally that's a question which is probably possible to answer. I can't answer it because I think you have to watch each country from a different perspective, because market players are different, kind of laws, not legal wise, but kind of how market works are very different. In Germany, I can just say that there will be vast potential out there for true budget hotels, because there's still too many non-standardized product out there. There's still too much non-refurbished product out there. There's still not an 85 hotel room right where a demand could be, but actually demand is leaving the city because there's no proper hotel there. So to us, I see no limitations. I mean, we're at 81 hotels right now. Our clear vision is to become the market leader of the budget sector in Germany, and obviously in Europe, still quite a way to go, but we're up for it. That's all I can say.
Maybe following up on that, and I think we were touching a very good point here, because When you look at Germany, obviously the general ADR levels are not as high as if you compare them to city center London, Paris. Germany is differently structured than other European countries. And if you think about, and this is maybe very provocative, if you are thinking about construction costs per room, whatever 5-star product costs maybe 250, 300 per key, 4-star product 180.
35 to 40.
35 to 40. You want to comment? 50?
Oh, it's hugely different. I mean, you go to Barcelona, we're building for 30,000.
In Germany?
And in Germany, it could be 50, it could be 60. You go
So
to
considerably
London,
lower.
you're looking at
Same.
70,000 pounds. So it's huge, you know.
So if you think about,
difference
I mean, you're all experts. 5-star hotel market in Germany, what's the ADR roughly? 180,
Munich
60?
or in Berlin?
Let's take Berlin. make it more drastic. Let's take Berlin, okay?
75 now. What is it in Berlin? Yeah. Do you mean 5-star luxury,
Yeah,
top
5-star,
luxury?
5-star like a Ritz-Carlton or whatever.
Something in the region of 200, I would say.
Okay. Even that high? I would.
180?
No, it's less, huh?
Ritz-Carlton?
I mean, the
Rocco
top
Forte?
notch, they are probably sitting at 200, but
Yeah.
the majority of the 5-stars, sort of, which we call
Upper upscale or
upper
upper
is-
upscale?
Yeah, but the
It's below, yeah. But top luxury should be in that region
Yeah,
somewhere.
I mean, Adlon and Ritz-Carlton
Yeah.
are trading at, at
Yeah.
those levels, yes.
So coming back to our initial discussion when we had these 5 C's, budget hotels are more profitable than 5-star hotels. How long does it take for you to make money? If you're the investor, kind of, it's kind of 50,000 per key compared to, let's say, 300,000. If the ADR levels are maybe, you're at 80, 70, 5-star is maybe at 180 to 200, so you don't need to be a rocket scientist, I think, to work out that it's amazing that nobody thought about this before, no?
Well, actually, I mean, there's another thing to it. I mean, not only that ramp-up periods are shorter for budget hotels and so on, because the whole kind of marketing aspect, publishing that there's a new hotel works differently to us. I mean, in the end of the day, very much part of the story is that being a hotel operator as a pure lessee means that you're actually stepping in and open up a business more or less for free. You don't have to pay to enter a market or to enter a business. To grow revenue, you literally do not need to invest. Obviously we do. We bring the FF&E along as a commitment also kind of lease regulation-wise. But I mean, we make an investment of whatever. What is the FF&E per regular room? Something like whatever, 400 per hotel of B&B, 400,000, 500,000, I don't know. And we make 20-year returns on it.
You keep the FF&E for 20 years in a hotel?
No, I mean, obviously we keep.
Sorry, bad question.
Obviously we keep FF&E for 20 years. Sometimes we exchange it. No, okay. And I mean, obviously we do our renovation cycles. But we,
capital.
yeah, I mean, a typical ROAS analysis, return on capital employed, for hotel operators is a fantastic thing to do.
Well, for us, it's slightly different because we've got a mixture. Yeah, we own 20% of the portfolio, and going forward, the pipeline is about 40% owned.
Okay.
So yeah, so we do make an investment.
What's the reason for that? Because you're simply cash driven,
To secure
or can
sites.
you develop faster? Or?
Yes, it is developing faster because more and more often, you know, in competitive markets, in order to secure the best sites, it's often easier just to go out and buy it rather than looking for a developer and investor, and by the time you're done with that, someone else bought it. So, you know.
Are lease contracts for your sector any different from kind of like I mean, you have experience with other products as well. Is this something where you see different lease contracts as an investor when you compare it to a 4-star product or 5-star product?
Well, the general wording is pretty much the same when it comes to maintenance clauses, reporting obligations, stuff like that.
Do you have a higher FF&E reserve, for example?
Yes, that's true for
5,
budget
7%?
hotels, something in the region between 5 to 7.
Okay.
just due to the fact that we have the assumption of shorter life cycles of F&E investment. And also, yeah, as already mentioned before in our discussion, the requirements for rent coverage are much higher.
So the 200 to 300.
Yeah.
Okay. Are you are your contracts any different? What's your average length? 25 years or?
Yeah, so for us it's
Including
20
option?
Okay.
Yeah, no, it's 20, 25 years institutionally acceptable leases with everything you would expect as
So
an
in a way,
investor.
pretty standard.
Yeah,
And not any different from
No.
a regular hotel product.
standard.
Yeah.
Okay. I'm sure everyone is really happy. Sorry, yes.
My name is Hugo Germain. We're developing hotels in Canada, and I'd like to hear you on development timeline because from what I hear, that you seem to be targeting good prime location and key urban centers. So are we. It takes time. I'd like to hear maybe on from the sourcing of the site to opening the hotel on average. What do you see in most cases?
On average, from first view to opening, 2.5 years.
Yeah.
2.5?
36 months. 36.
I mean,
It takes time.
No, it takes time. It takes time.
And you have to be fast in
Since
your
it's
acquisition.
therapy,
You have to set up a good team in the acquisition to build up a brand or build up a hotel chain. And if somebody say I'm the boutique owner or operator of, I don't know, XYZ hotels, it's fine, but it's only 1 or 2 or 3. Last year we did an M&A acquisition, and these hotels were also development products, but in terms of 10 years. So they did the work, and we grabbed the opportunity and made the buy in a site. And so acquisition and the organization has to be very tough and good organized, so that you can grow on a fast track, I would say.
I think Max is a little bit faster because it also depends on where you intend to develop. It's a big difference if you want to develop at the Kudamm next to the Waldorf in a high-rise tower, or if you want to develop on the green field of the grüne Wiese, so to say. That's a huge difference in terms of timing.
Yeah.
No, absolutely. I mean, we very often are in the happy position to be a bit quicker than the 36 months. That's true. However, maybe just to stress one point. I mean, applying for a building permit these days, interestingly, investors are very open to enter into project developments very early now. In former times, it was with building permit. Now they're actually committing a lot earlier, and us as B&B hotels, we have no problem securing such an investor to a certain comfort level that in case things fall apart, he's not left with a plot he cannot use as a hotel. But thing is, refugee crisis. I mean, this shouldn't be a political discussion now, but as a matter of fact, we see that in public authorities, literally people are taken away from desks working on our building permits, not being reachable for weeks because they've been reassigned to handle housing issues for refugees, administration works, and things like this. And some cities, I mean, as soon as you enter in for example, cities like Munich, I mean, we see delays on building permits of half a year's time. We see in other cities that public authorities are writing interesting entries into a building permit, which are not based on any kind of law or obligation of us as an operator or owner of real estate to fulfill. So this takes a lot of time. Very often this is very much also in project developments, a wish list by public authorities. I mean, you're trying to develop a new brownfield site, greenfield site, and suddenly you're supposed to do the new roundabout for the kindergarten next door or something. I mean, it's like, let's stay reasonable. We're a hotel operator.
But that's developer life, no? I mean,
That's developer life.
Yeah, but we see that there's a trend of trying to overachieve.
Okay.
Very often.
The party's nearly over. I just looked at my watch. I would like to, I mean, just put them up again, the 5 C's, and we already did the diagnostic that 5-star hotels might become dinosaurs and we need to save them going forward. No, not really, huh? What I would like to understand a little is just one last question around your profit margins. I think everyone understands that your profit margins are really kind of like good. Is that right? If you look at the third point, budget hotel operators require at least 15% NOI margin. Is that, or are you happy with less?
Not happy.
Not happy. Okay.
We wouldn't do a project for 15% NOI.
Higher?
Obviously, yes. No, I mean, it wouldn't make sense. I mean,
Okay.
we have small hotels, so obviously kind of the pure figure contribution is rather low. I mean, margin is high, but the pure financial figure is somewhat limited. But yeah, 15% I think is somewhere in a 3, 4, 5-star segment. Loads of market participants would be very happy to sign up for, but not in the budget world, no.
Okay. That should put you at quite a lot of comfort, because if you look at leases, then basically there's a lot of comfort level, no?
That definitely, and there are a few operators in our portfolio which I would assume would be happy to achieve that 15% NOI margin, but luckily they are not trading in the budget segment. So yes, I think that's an exceptional phenomenon we see, what we currently see in terms of NOI margin in the budget segment. But in general, in the 3, 4, and 5-star segment, the segment which is still pre-leading the market, I think these are reasonable levels.
Okay. Any last words from you? Strategies for the future, where you want to kind of like summing up, organic, inorganic, you're going to go more focusing on bit by bit, or you are happy to buy portfolios? You eating up some portfolios, do some M&A activity. I think you're more organic, I think, at the moment.
Organic, absolutely. We believe in that, and we have a very clear view of that. We think you create value only by growing organically. If you're doing lots of acquisitions, you usually get what you pay for. If you're lucky, there's synergies. If you're not lucky, it doesn't work, but usually you just get what you pay for. But if every new property we buy, we create value for us, for our customers. You know, we're doing a new hotel in a new place, and that's what we like to do. We're passionate about what we do. We want to do new hotels.
Max?
I mean, never say never about buying a different chain or portfolio or what might be out there. However, we are quite clear. We are very much most likely the least favorable investor into an existing product, because we will change it. We will have to go in and rip out the FF&E to put in new FF&E, and there are too many other players out there who would say, okay, I'm a franchise partner of XY, so let's reflag this from a whatever to a whatever, and they keep everything in as it is. So kind of just from a financial standpoint, it doesn't really make sense. Still, if there's the right thing, we'll reconsider. But we are a single brand company. We do what we do and nothing else.
Mm-hmm. Martin, last words for you. Are you convinced to even widen your kind of like investment into more budget, or is this something where you would say I'd rather go for maybe 4 or 5 star?
Go for more B&B hotels in your portfolio.
Yes, definitely. We should meet after the discussion. No, I'm personally, and also Union Investment is absolutely convinced about investing more in budget hotels, and this was also the reason why we decided to set up our first hotel fund in 2013, which invests in budget hotels, and we definitely want to increase the number of budget hotels in our portfolio in the future, yes.
So everyone, there's an investor. Yeah. Thank you very much. It was a really great pleasure to have you on the panel. Any questions from your side? Then I would like to sum up. Thank you very much for joining us.
Thank you.